always want to do for yourself what the smartest guys on any given topic are doing for themselves. What am I doing? I'm buying gold. I'm buying silver. All hard assets, all of them. And most of them by a wide margin with gold as a component of them, because that's the monetary metal. The very wealthy that typically would invest in real estate, having pulled their money, were now investing in collectibles like Rolexes, gold, coins, other things like that. Mm-hmm. And then I'm talking to, and some of you may have heard this, but I was talking to an antique dealer friend of mine, very high end, so museum quality, high end. He just finished a show over the weekend, and he said it was the best show he's ever had in 25 years. So what does that tell you? That tells you the big money is getting to hard assets to protect their wealth. Yep. 2022, in my opinion, is a pivotal year because 2023 is supposed to be the year when 610 trillion notional value in contracts, most of those derivatives that are supposed to be converted from the LIBOR interest rate benchmark to the new SOFR interest rate benchmark. And the problem is, number one, it's a great big experiment. They've never done this before, and certainly not at this magnitude. And this is also a forced restructuring because the market didn't adopt the SOFR the way that the feds wanted them to. And the reason is because it doesn't really work properly. So it doesn't really, it masks a lot of risk where we've seen, LIBOR jump during crisis. So far, flat lines. So, we've got 610 trillion notional, and you're hearing me say notional, which means who knows how much is at risk? Nobody. And seriously, nobody knows what's at risk. Not the IMF, not the BIS, not the Fed, not the FDIC, not the OCC, not the ASDI. Nobody knows how much is really at risk. But hey, we're going to transfer all of them from this because you found out that this interest rate was just an opinion to this, which they say is a market driven index, but it's not because they eliminate a whole lot of bonds from going through it, which is why it doesn't respond properly in crisis. So, this is a very pivotal year. I think this is the last year that you really have to really fully get into position while you still can. Remember that you really want to be as safe and secure as possible. And part of what you can do to do that, buy your gold and your silver, food, water, energy, security, community, and shelter. Right now, you need to be as safe as possible. And that's gold and silver physical in your possession, in my opinion, pre-33s, are the safest thing that you can possibly do.
Definitely the safest.
We go through this hyperinflation, and with what happens to mortgages, we're going to get to a point where if you cannot pay off your mortgage, then they have you by the cojones, and it's not in your best interest, whatever the changes are that they make. And I don't want to be in that position. So I have plenty of gold that if I wanted to pay my mortgage off this second, I could do it in a heartbeat. And so in that case, yes, as long as you can do that, that's part of the gold strategy. And it's just being suppressed from its true value because a rising gold price is an indication of a failing currency. But ultimately, to get the public trust and confidence back, that's what gold is really about.